Now, Ivory Johnson, founder of Delancey Wealth Management, joins us from Washington, D.C. to explain the new GDP numbers and other economic news. Ivory, thanks very much for joining us here on Exchange.
Thank you for having me.
Let's get straight to the point. Just give us a quick decipher in terms of what those figures finally mean.
Well, essentially what happened was consumer spending increased by 2.1%. You mentioned the weather. That was a big factor. Also, low gas prices helped out as well. Another big component that you would expect is that the home construction has increased. And that's a function of two things. The Dodd-Frank regulations got reduced a little bit. Last year was very difficult for particularly 1099 or self-employed people to get a loan. That's been relaxed so people can get mortgages. And there's also a tight supply of houses because a lot of homeowners are still underwater from the housing crisis, can't sell their house, and so you see a pickup in home construction. And you know, even back when the housing crisis was going on, before that, it was 10% of the labor force was just related to real estate. So when you have home construction, that puts a lot of people back to work.
So the Ephedra Vision now from 0.7 to 0.2. Why do you think there's been such a big disparity?
Well, I just think that, again, you mentioned the weather, and there was also the ports on the West Coast that was constricting a little bit of growth as well. But you know, it's not an exact science. You know, as the numbers come in, they revamp them all the time. But certainly, this is welcome news.
And how do you think the markets obviously didn't react very favorably? What do you think they're taking away from this?
Well, the market's probably more concerned with what's happening in Greece at the moment. But if you look at it on a the rate of change basis, I mean, the markets go up when companies make money. Earnings per share and revenue on a year-over-year basis, it's actually decelerating. So, you know, we're not seeing a particular growth in the market. The inflation rates are low, not just here, but in Europe as well. And, you know, I think once Greece gets settled, you'll see the dollar go up. When the dollar goes up, that causes deflation. And that just shows that the economy is slowing down.
We'll come back to Greece in just a moment. Let me quickly ask you about interest rates. Do you think, how is that going to have an impact, do you think, in the next quarter, if we can look ahead to the next quarter?
Well, if they were to raise rates in September or December, I mean, all businesses are a function of cash flow. So if your future cash flow, if interest rates go up, the present value of that cash flow goes down. So unless they can, you know, accommodate that with higher growth, and by the way, that's not growing at the same rate, the stock prices obviously go down, plus it's more expensive to borrow money. I don't think that's going to happen. As I mentioned, the inflation rate here is low. If they're going to be data dependent, I don't know how they get to the 2% rate. It's 0.9% in Europe. And again, if they raise rates, that dollar goes back up. So I don't think that they're going to raise rates necessarily this year.
Very quick look at the next quarter. What do you think the predictions are?
Well, as long as the companies are still buying back their stocks, I think we'll have a lot of volatility. But I think what's going to happen is the euro goes back down as they put forth this $1.4 trillion quantitative easing program that they have going on. I think you'll see the dollar creep up a little bit. My sense is you want to own things that get paid in U.S. dollars, like the mid caps and small caps doing really well. The healthcare sector is doing well. They have the ability to raise their prices. So as long as companies are able to keep buying back their stocks, right now, 95% of S&P 500 earnings are used to buying back their own stocks. You reduce the shares outstanding, you increase the demand, and it pushes the stock price up. And as long as those components keep moving in the right direction, I feel good about the market.
Okay, Ivory, we must leave it there. Run out of time. Thanks very much indeed for joining us. I appreciate it. Thank you.
Thank you.